Hey guys, Anthony Special here with Hawkeye Traders. Hope everyone's having a great day so far. This week I want to pick up where I've been leaving off with this rule of 72. What's most important to me is how quickly you can double your money. So before I do that, of course, whatever I do share with you is for information, educational purposes only. Please seek licensed financial advice if you are uncertain of how you are handling your money. So guys, this rule of 72, I'll just reflect on it very quickly. So 72 divided by the fixed annual rate of return gives you the number of years that it takes for you to double your investment. Now, I don't want to wait 6 years, 7.2 years, 9 years, 12 years, or 18 years for that matter for my money to double. I want to do it on a much more aggressive and quicker basis. Listen, the objective here is to build wealth, and the way to do that is to be able to get yourself, ahead of the curve. Now, there's very few investment products out there today that can even guarantee you a 4% annual rate of return with interest rates where they are. So, with that being said, you have to take things into your own hands a little bit. And one way to do that, among many, is to get involved in just taking small, simple, great return on investment trades within the market. Now, if you want to do that, we here at Hawkeye have a suite of indicators that can help you do that. Let's take a look at one of my day trade setups from last week, and we'll go over just what that daily rate of return looks like, and you can see how you could compound that into becoming a much more aggressive way to double your investment. So let's take a look here. So there was a couple trades that transpired during this session, 3 to be exact. Our first trade just went in the direction that we expected it to. It just never touched its target. And guys, listen, that's part of trading. And with that, it is what it is. So as that transpired, we took a little loss. We lost $200. It's okay. All right. Losers are part of the overall equation when it comes to being a trader. Listen, if you own an apartment building, there are months that you're not going to get your rent. Okay, if you own a commercial piece of real estate and you're renting it, there are months you're not going to get your rent or you're going to incur some type of expense. When I take a loss, to me, it's paying rent to the market. It's just the cost of doing business. It is what it is. So the second trade offered us a movement, and then a new supply zone came in as that movement was transpiring. So we had to close our position because our reward became less than our tolerance. So we lost $200. We made $600. It's, 8 o'clock in the morning, and we're up $400 for the day. Listen, not a bad day's pay, but there was greater potential later on in the afternoon. And that, I shouldn't even say later in the afternoon, it was later in the morning. This transpired at 10:30 in the morning. So as time went by a little bit, the market went into what we call congestion. Now, if you understand the way the market moves, you'll know when the market breaks out. And that's exactly what happened. The market broke free and gave us a low risk, high reward trade opportunity. And with that, we banked 35 ticks. And that's $3,500. So we got 4 plus 35. That's $3,900 for the day. Now, that is a fantastic day's pay. If you can't trade with 10 contracts because your account doesn't allow it, you could do it with 1, and it still would have paid you $390 for the day. Now, I don't know what you do for a living, but most people that go to work don't make $400 a day. That's a lot of money. That's $2,000 a week. That's $100,000 a year. That's more than double the average household income in the United States. So with that being said, $400 is a lot of money, especially as you start to build that over time. So what does this look like on a percentage return? Because it doesn't matter what account size you have, it matters about the rate of return. So let's do that real quick. So we have $3,900. Take the calculator out here, $3,900. And we're going to divide that by the equity that we used in our account to achieve that. So on 10 contracts, I used $60,000. Now, if you're only doing it with 1 contract, you would have only used $6,000. It's just adding another zero. Don't be intimidated by the zero. And what does that work out to? That works out to 6.5% return on capital, return on investment. So that is basically a percent an hour. If I spent 6 hours in front of the computer, I had made a return in 3 trades of 6.5%. So, where are you going to get 6.5% in 6 hours? That's basically a little more than 1% per hour on your money as you're sitting there. Just taking 3 simple to enter, simple to manage, following the rules with consistency and discipline trades. So 6.5% in a day. That is a tremendous day's pay, a tremendous return on investment for just one day. I mean, guys, we look back, how long does it take at 6% to get a double on our money? 12 years. That's 6% per year. We did 6% in a day in just this setup here with 3 simple little trades. Okay? So if you want to better understand how you too can start multiplying your money, compounding your money, exercising what that theory of Rule of 72 is, I encourage you to click the link below and watch the Project V-Swarm webinar. This webinar is going to give you example after example of what I just showed you. I'll show you how you can just take 2%, 3%, 6%, 9%, 10% trades on a regular basis. If you can capture that move on a daily basis and you start to compound your money, your account will compound just as quickly as you are compounding your trades. So with that being said, guys, click the link below. I encourage you. It's really well worth your time. You're not going to get this rate of return in any other investment strategy that exists out there, okay? This isn't magic. This is just understanding the 3 principles, okay? Principle 1, volume precedes price action. Principle 2, price action reflects to supply and demand. Principle 3, understanding how supply and demand within the market works. If you can put that equation together, if you understand the way the market moves, you can very easily do this. So once again, click the link below, check out the webinar. Questions, comments, concerns, always feel free to give us a call or email us, and you can visit us anytime at HawkeyeTraders.com. Have a great day, a blessed day, and a profitable day, and I will talk to you tomorrow. Take care.